Video 2. This is going to be a lot faster video. September 24th, 2002. This is Ultimate Traders on Reddit. Nathan from Queens. And I forgot to add in the first video. Sorry about that. And it was a long video. But when you're buying a stock and the stock has actually, even if it doesn't have any value, you're basically parking your money somewhere. You're parking your money somewhere in hopes that one day things will be better and your stock is going to be up. So just try to make sure that if you're going to be buying dips in this market, and I'm not saying it's a bad thing. Just try to make sure you're buying dips of something that has value. So while you wait, you can get returns. And if it was a real company, if the market gets better in 6 months, 9 months, or a year, your stock, even if you didn't buy the absolute low, will be higher than your purchase point. So video 2 is the state of the market. So just like I was saying in my last videos on September 5th, we were likely going to hit new 52-week lows. That should not have been a surprise to you all. I said in the videos even back in June that we should not have rallied off the lows. We had a whole bunch of bad data. So what I was doing, I was buying puts. But here we are. It's finally going according to what I was expecting. Now, we just had a Fed meeting on Wednesday where we had a rate hike of 0.75. The problem is right now we're at 3.13 on the rates, on the Fed funds rates. The forecast is for 4.4 by the end of the year. That leaves us with about 1.3 left on their target. What does that mean? That means in November, we are likely to have another 0.75, mid-November, and beginning of December, a 0.5, equaling that 1.3 to take us to 4.4. The Fed meets every 6 weeks. And a long time ago, nothing mattered because you didn't have rate hikes from 0.125 to right now 3.125, and it's about to be 4.4. So we're going to get like a 4.2 rate hike in the span of just 1 year. But this is the highest we've been seeing inflation over about 41, 42 years. The biggest issue is earnings. Nothing is priced in, like I just wrote. I don't even know, and trust me, I know more than possibly everyone in the world. According to U.S. stocks, there's things I don't know, of course, but with U.S. stocks, it would shock me if someone knows more than what I know. The reason why I'm saying that is interest rates crush earnings, as I did in the video in February or March. Though that video was with a 1 to 2% rate. We were at 0.125. In the beginning of the year, I was forecasting we were going to get about 2%. But we overshot that, and we're going to keep going higher. So I don't even know what that's going to do to earnings. But take a guess. That means earnings is going to go low. And every time there's a rate hike, it takes maybe 3 or 6 months to see what's going to happen. What does that mean? That means the data is going to be worse. Not better. We have earnings kicks off on the 3rd week of October. That earnings is probably going to be worse than the second quarter earnings, which were bad. Well, they weren't horrible, but they were bad. They were just failing, which is like a 60. This quarter's also going to be like a 60. The problem is the first quarter, because all these rate hikes, like I just said, take some time. We're going to see maybe 55s. 55 score on earnings are like 50 is when you miss by like 10%. Okay? You get a 60 if you beat top line but miss bottom. It's a 60, not a 65, because you didn't pass. If you miss like a top and bottom by like 3%, 5%, and you miss them both, maybe give it a 55. But if you miss by 5 or 10%, you could start passing out 50s. If our earnings start missing by 5% all around, we are looking at NASDAQ 8,000 to 9,000 safely. Currently, I still feel like the safe range is 9,500 to 10,500 on the NASDAQ. S&P range 3,300 to 3,600. But like I said, this is before earnings that's coming out. Now, like I said, I'm forecasting earnings to be bad, but not terrible. Terrible is if we start missing top and bottom by like 5%. Right now, we're at a 60. The earnings that came out, that means you beat top and missed bottom. But if you start missing both, and you start missing both by like 3 or 5%, it's really bad. Because what does that mean? That means the E in PE is coming down, and the multiples are going to contract. Going to contract. So what you have to do is ask yourself, if you're in cash on the sidelines, is it better to stay on the sidelines when you know rates are going higher? I just told you, the Fed funds 4.4, they're looking, and we're at 3.13. Rates going higher. Earnings are coming down. I just told you. Earnings are coming down. 3, the Fed's already said they were going to raise the rates and then sit it out and wait a few months for inflation to come down. Now, they didn't say how many months, but let me tell you, because I know we're not going to see, they were trying to see CPI in the 5 handle. That means 5.9 by the end of the year. That's not happening. It's definitely going lower. We just hit 8.3. Definitely going to go lower. We might even see 7.5. But we're not going to see 5 point something. And the reason why I'm telling you that is I don't foresee like a 4 or 5 handle until June, maybe like June of next year. Can it be sooner? Yeah, I can't predict everything, but it's not going to be March. Not going to be March. Maybe it's April, maybe it's May. Now, if they hit us with the 5% rate right now, then we might actually see a 5 handle like in March. But that can happen because our earnings are going to get destroyed. So you don't want them to front load us and give us a 5% rate because your earnings are going to get destroyed. So when people say that it's priced in, it's okay, hike us by 1%, you do not want that. You're saying you want that because you think the stock is going to go up. The stock is going to go up, and it's going to go up temporary. And then when they report earnings and it's a disaster, you're going to say, I wasn't too bright. I kept saying let's front load and give us super heavy rates, but now my company is missing. So the biggest issue is this. Last year, 2021, it was post-pandemic, like we just opened up, sales went through the roof. The S&P 500 went up 26%, something like that, which obviously is not normal. Normal's 8%. But the problem is that $208 that the S&P 500 made this year, I don't know for sure if it's going to make $208. Right now, I have my estimate at 220. Goldman Sachs has it as 226. But let's just say I have to lower it and it's 208. It was 208 last year. What does that mean? It means no growth. No growth. The S&P normally trades at like 17, 18 times. And I just said, bear market recession, I give normally like 15 times. But I don't know if I want to give 15 times if we have no growth. We already had 2 quarters in a row of negative GDP, which confirms a recession. September 30th is the end of the 3rd quarter. I think the end of October, we will get GDP numbers again. I think right now the forecast is 3.3 growth. What if we get 3 straight quarters of negative GDP? that tells us prehand what's going to happen with earnings later on if we're getting negative GDP. That means S&P not only might it not hit 208, which it hit last year, we might see a decline. We might see a decline. Now, I'm not saying that's going to happen. I'm saying all the data that's coming out is leaning towards that. When you do the stocks, you're in the market for a long, long time. You're keen to senses all over the world. You're keen to oil, gold, crypto, the US dollar, other foreign currencies, gas prices, gold, silver, other commodities. Everything is connected. When I see everything bad, and I'm telling you it can get worse, that means the probability is high that it can get worse. And that's going to go into video 3, what I plan to do. Because video 2, the state of the market, it is taking a dump. I said before, that safe range, S&P, 33 to 3,600. And NASDAQ, 9,500 to 10,500. But I am not saying that with confidence anymore. Everything that I'm getting, the data is getting worse, not better. The data is getting worse, not better. So you tell me, have we finished making the lows? Have we finished making the lows after you watch my videos? Then you go on CNBC or you listen to these people on social media and they tell you, that's it, we hit the lows? Come on, you guys just make me laugh. But that's video 2.